And I think it's going to be some number like 800 basis points or something, some number like that. And all the institutions that we have invested with us or with our competitors in the space, they have maybe 50 basis points or at most maybe 2% of their assets in blockchain. So my kind of construct is we've done a lot of work evangelizing for our space over the last 10 years, and we've gotten some institutions, but not even all, over the last 10 years, and we've gotten some institutions, but not even all, go from 0 to 1. We got a no to become a yes, but it's still very, very small. And the trade for me is over the next 10 years, it's going to go from 40 basis points to 800 basis points. And that's just a lot of buying to happen.
Despite the continuing drop in the value of crypto assets, institutional investors, such as large financial firms, family offices, and sovereign wealth funds, are unquestionably still highly interested in making investments in the sector, according to experts. Earlier this month, State Street, a reputable investment management company, disclosed that despite market sell-offs, institutional demand for cryptocurrencies is not gaining traction. State Street Digital is the product lead for the Asia-Pacific area. Institutional clients of the company, according to Irfan Ahmed, are still interested in cryptocurrency and blockchain technologies. Ahmad stated in the interview that throughout the months of June and July, when activity really picked up, institutional clients didn't necessarily double down and weren't actually discouraged from making strategic bets on the asset class itself. The executive continued, "The message from that is, I think, a sense that the asset class is here to stay." Financial behemoths Charles Schwab and Fidelity revealed the opening of a new cryptocurrency exchange last week. The first exchange of its sort, edX Markets, will provide investors safer, quicker, and more effective Bitcoin trading, according to the release. A day prior to that declaration, the Wall Street Journal reported that Fidelity was considering making Bitcoin available to its more than 34 million individual investors. Despite the fact that the Boston-based banking behemoth has yet to confirm or deny the reports, Mike Novogratz, CEO of Galaxy Digital, said something similar today that he mentioned last week at a crypto conference. "A little bird in my ear told me Fidelity is going to migrate its retail clients into crypto soon enough. I really do believe the bird." That's not all, though. In addition to announcing the debut of Nasdaq Digital Assets on Tuesday, Nasdaq noted that institutional investors have become more interested in digital assets recently. The new cryptocurrency operation will initially provide institutional investors with custody options for Bitcoin and Ether. These announcements from major financial institutions and the second largest stock exchange in the world demonstrate how fiercely competitive the crypto market is. Recently, Pantera Capital founder and CEO Dan Morehead and Will Powell of Genuine Vision CEO discussed the rise of institutional investors in the cryptocurrency market. They also talk about how this tendency will change this market over the next few years. We hope you will watch, like, and share this video as we provide you with an important update on institutional investors. Don't forget to add your thoughts and insights in the comment box as well. For more videos like this, turn on post notifications and subscribe to the channel.
Talk to me about the institutions and that adoption curve. The first people in the space were the family offices and the high net worths. Then you're starting to see more and more institutions come in. What's the journey there, and how far are we with that?
There again, I think we're just at the tip of an iceberg. And it's an iceberg this industry's been talking about for 10 years. So, all credit to the fact it's been predicted for a long time. But it is actually starting to happen now. There's big public pension plans that are very public about how they're investing in blockchain. Most of the major endowments have blockchain investments now. And the way I think about it is, you and I used to trade together in the 90s, and, we've been through commodities becoming an asset class, emerging markets becoming an asset class. It's obvious to me that blockchain will be an asset class, and everybody's going to have a blockchain team, blockchain allocation, and I think it's going to be some number like 800 basis points or something, some number like that.
My view is there's that, which is the buying side, and then there's the retail adoption side as we build out use cases for the masses. And those two things, is how you get to the 3 billion number. And I don't know, my guess is this is it will end up being a $200 trillion asset class, which is in line with the size of other asset classes. And the adoption is fast.
Yeah, it's happening. There's a lot of good use cases, like especially cross-border remittance. That's such an easy one to get your head around. The average fee is 8% for remittance, and for us in finance, that's just a number. But like for the migrant, it's a month's wages that they're paying their remittance company, and so you already have 10% of all U.S. to Mexico remittance going over Bitcoin. That's great news. It doesn't sell newspapers, so they don't publish stuff like that because they like to publish bad stuff. And there's 2 million people using Bitso now. So there's a lot of traction, bubbling up. But again, we're going to billions in the next 10 years. Yeah, so we've been very focused on DeFi the last few years. It's building a parallel financial system. Gaming's coming online now. We have a couple 100 million people using blockchains. So there's a lot of really cool gaming projects. There still are a lot of opportunities in the scalability sector. We're invested in things like Arbitrum and Starkware that are helping the main blockchains pump a lot more volume through. And then there's space for other layer ones like Near that allow for much higher throughput. And so there still is dozens of different use cases that we're focused on.